When do we have? Yes, we can remember. I spoke about this the last time we met. How many financial statements do we have? Yes, how many do we have? Please, am I audible?
Yes, please, I can hear you.
Yeah.
So please, how many financial statements do we have?
2, please.
Namely,
General
if you
and
said two,
special purpose.
namely, how many types of financial statement do we have?
We have general purpose financial statements, special purpose financial statements.
Okay, so unfortunately, that answer is wrong. I've presented this thing to see if people will tell me these are the types of financial statement that we have. And truly, truly true. You said it. Who can remember the types of financial statement that we have? Yes, who can remember? Hello, who can remember? Nobody can remember. Wow.
There's
I know
question again.
not the account.
We've discussed what I'm asking you. Yes, and I'm sure that everybody here have joined the class that day. And what I'm asking, we've already discussed it. And I'm asking that you should tell me about it. You can't. Please, if you are going to be writing that, if it's truly, truly that you are going to write I Sunday, if truly, truly, you'll be writing I on Sunday, and if truly, truly, then because I learned you guys did a quiz yesterday, and people use AI. So imagine that you use AI to do the quiz, you got 50, 60, let's say 55, 60 thereabout. Then in the IA, you got less than something like that. The best thing you can do, since this IA is not on offsite, is to understand. After studying, you revise. The best thing you can do is to do that. So the types of financial statements we have 5. We discussed 5 the last time, and I actually said that for the sake of this semester, you are going to focus on only 2. Yes, Madam Margaret.
Please, I wanted to know if you are asking of the components of financial statement
Please, I can hear
or
you.
you want the elements. Please, I say, were you asking of the components or the elements?
No, I didn't ask for the components nor the elements. I said the types.
Thank you.
So I said, so that day, was it 2 days ago? We discussed that. So I said there are 5, and we saw it ourselves. Not that I'm the one who is telling you. Everything we are doing, it is directly from the slides. Not that I'm saying this somewhere to come and show you guys. No, they are all directly from the slides. So I said there are 5, and it's only 2 that are, I mean, for the sake of this semester, it's only 2 that you are supposed to do. We've explained them extensively, which the 2 that I said they are what is mostly common at this level is the uh, statement of financial position, which we also call the balance sheet. And I remember saying that we prepare the balance sheet to ascertain the financial position of the entity or the business that is covering the business's assets, liabilities, and equity. I said that. Then I also move on to the next one, which is statement of financial performance, which I said it is used to ascertain financial performance of the entity or the business. Hence, you know, comparing the business's incomes to its what expenses. Please tell me I did not say anything like this. Hello, please tell me we did not discuss anything like that.
Sir, you did.
We
Uh,
did.
we discussed it, and it seems like we are discussing, but we are not moving forward. Seems like we are discussing, but we are not moving forward. If you don't understand the previous ones, how can we move on? So if you have any questions, let's see if there are some things confusing you and all that. Let's see. Let's take questions and all. Let's see if you have things bothering you. Let's see, because we can continue if you don't understand what you've learned so far. Yes. Anything bothering anybody? Please, accounting wise, okay. Yes, anything bothering anybody? And I think we even have recorded sections there. So it means that you don't even listen to the recording. Wow. Yes. Anything bothering anybody? Hello.
Hi.
Silence means consent.
Yeah,
If
yeah,
you can,
boss.
if you
Yeah,
can
yeah,
go ahead.
boss. My son. Go and buy for him.
Yes. Anybody? Anything bothering anybody? Please. Yes. Ebusiafo.
So we can go on.
Anything? How can we go on if you don't understand the previous one? Was This is accounting. If you don't understand, it is difficult because we are going to build on and you don't understand the previous. How? Also tell me how. Yes, was yeah, let's move on. So
Okay.
the classes of the financial statements, they can be classified into 2. We have the general purpose and the special purpose. Yes, we have the general purpose and specific purpose. I saw a question like that from your quiz yesterday, which I think, yes, the question is a financial statement which is prepared to meet the expectations of users. Financial statement prepared to meet the expectation of users. So let me re-get the question wrong. So a financial statement which is prepared to meet the expectation of users, not opportune demand for the report in a particular order of their needs, is called a general purpose financial statement, audited financial statement, management reports, cash flow reports. So that answer should be the general purpose financial statement. So financial statements, that the information has been addressed to what? The larger public, or to all users, is what we call what? The general purpose financial statements. Okay. That is a general purpose financial statement. And the opposite is true for special purpose financial statement. That is information to a particular user or group. But this one, it is to all the users. Okay. So let's say your business is A Limited. Okay. Your business is A Limited. So when the financial statement is being addressed to all the users of this business, all the accounting users of this business, or all the accounting information users of this business, that is general purpose financial statement. But if the financial statement is being addressed to only maybe few or just a particular group, that is a special purpose financial statement. All right, so that is it. Now, let's look at the element of the financial statement. When I was explaining, was it 2 days ago, when I was explaining the financial statement, I actually spoke about this. I did not explain them. So today we are going to explain them. Okay, we're going to explain them. So we spoke about income statements. We spoke about income statements. Okay, now what you need to know is that income statements that we discuss is used to what? Ascertain the financial performance. Okay, used to ascertain the financial performance of the business. And the elements under the income statement are the income and what expenses. That is how we ascertain the financial performance. That is, we compare the business's incomes to what? The expenses. If the income is higher than the expense, then we have what we call what? A profit. But if the expenses are higher than the income, then we have what we call what? A loss. Okay, so the element of financial statement, under financial statement, we have two major. We have the income statement and financial position, right? Now, under this one, which is the first one, the income statement, we have what? Income and what? Expenses. Let me do it this way. Come. Please, can you see the empty sheet?
Yes, please.
Yes, please. Yes, please.
So we have financial statement. So financial statement, our focus is going to be on two major. Okay. So these two major are income statement and we have the balance sheet, which we call the SOFP. So we have the income statement and we have the SOFP. This is what we call the balance sheet, okay, or the statement of financial position. So the balance sheet. Now, under the income statement, the elements are, so financial statement, we have what? These two, okay? These two. Then under this one, which is what the income statement, we have two, which are income and what? Expenses. Okay, which are income and what? Expenses. Then under the SOFP, we have 5 of them. Sorry, we have 3 of them. Under the SOFP, we have what? We have 3 of them. We have assets, we have liabilities, then we have what? Equity. Okay, so this is financial statements and they are classified into two. The two are, which we are discussing, which are our income statement and what? The SOF, which is the balance sheet. So under the balance sheet, we have the income expenses. Then under the SOF, we have what? Assets, liabilities, and equities. Now, the components of financial statements are 1, 2, 3, 4, 5. Okay, so the components of financial statement, we have the assets, we have the liabilities, we have the equity, income, and what, and expenses. So these are the elements of what? The financial statement. And the financial statement, we have two, which we have the income statement and then what? The balance sheet, right? And these two are the elements which make up the financial statement. And financial statements are two. Okay, so these two will go for the first one, and these three also go for the other one. So simple as that. Are we on the same level?
Yes.
All right. So that is it. Okay. So the element of financial statements are the element of financial statements. So these are the elements. Okay. Take note. You see them in your eye. Take note. They are the elements of financial statement. Hence, they are the building block used in constructing financial statement. You can see a question like, what are the building blocks used in constructing financial statement? They are asking about these 5 things. Okay. All right. So the ones that are directly to the performance of a, so which financial statement do we use to ascertain the performance of a business? Yes. Which financial statement do we use to
Income
ascertain the
statement.
finance? Very good. Income statement. And you can see that these two are the what? Are the elements or the components. Okay, very good. And which financial statement is used to ascertain the financial position?
The SOFP.
Very good. And you could say
Statement
that,
of financial position.
very good. And you could say that these three are what we are looking at. Simple as that. Okay. So now let's take the element of financial or the components one after the other, and let's see. So the first one we are going to look at
Please, a
is,
question.
yeah, you can ask.
Please, is the element the same as the component?
Is the element the same as what?
The component of
So,
financial statement.
so elements of financial statement are these 5. Okay. Please, are you
Yes, sir.
getting it? These are the elements. And the components of financial statement, what makes up the financial statement? They are the same. They're basically the same. Okay. But listen to the question. If the question is about the element or the component of financial statement, they are 5. Okay. But if the question is about, let's say, the elements or the components of, please mute your mic. Please mute your mics. Mute your mics. So if the question is about the elements or the components of financial statements, they are 5. Now, if the question is about the element or component of income statements, they are 2. Element or component of financial position, they are 3. Exactly.
Yes, sir.
All right. So you are looking at the first one, which is assets. Yes, generally, I'm not asking about the definition on the slide. Generally, when you hear the word assets, what do we think asset is?
I think asset is property.
Okay, generally, yes, that is what we always think. The assets are
Or
properties or valuable. Very good. So generally, that is what we always think, that assets are the properties, valuables, and all that. Now, whatever you are thinking or whatever you thought is not wrong. Okay, and also it is not entirely true. It means that it's not entirely wrong and it's not entirely true. Okay, generally that is it. That is an asset, generally. Okay, but asset has a deeper meaning than whatever you thought. Okay, whatever you were thinking asset was. Now, normally we think asset is maybe the valuables, um, the properties of the business. Okay, but it is right? Now, let's look at this. An asset, okay, an asset is an economic resource, okay, controlled by an entity. So take note of this. An economic resource or a present economic resource controlled by the entity as a result of past events. Okay, as a result of what? Past events, which has the right or the potential to produce future economic what? Benefit. Okay, or somebody can put it like an asset is something the business controls that came from the past, okay, or that came from past transactions that is expected to bring in, money in the future. Okay, so any resource or any economic resource that has been acquired in the past, okay, that has been acquired in the past, which is expected to bring in future economic benefit, is what we term an asset. Are we on the same level?
Yes, yes.
Can you take it
Very good.
again?
So
Yes, sir.
that is what we term an asset. A economic resource that is being acquired in the past. Okay, that is being acquired in the past. That is and expected to bring in what? Money in the future, or expected to bring in what? Future economic benefit, is what we term an asset. So if whatever you have, you think is an asset, and the thing cannot give you money in the future, the thing is not generating money for you, then accounting is telling you that that is not an asset. Okay. So an economic resource, probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or event. The major thing here is what? Future economic what? Benefits. And the common one is money. So if you have that resource and that resource is not giving you money, it's not giving you money, or it's not intended to bring you money, then that resource is not an asset. Okay, then that resource is not an asset. We are not saying that, let's say the resource, or I'm not saying that the resource should be, let's say, a resource that you are directly using to make money. No, if it is even indirect, it is helping other things to give you money, then it's an asset. Okay, I'm not saying that it should bring you the money directly, but if that is aiding in getting money, then that is what we call an asset as well. Okay, please, I hope you understand.
Yes, sir.
So that is what we tell.
Hello, sir.
Hello.
Yes, sir. With this explanation, let's say maybe I have a house which I stay in. Maybe I'm not renting it out. I'm using it I'm using it personally. Does that mean I can't call it an asset?
You can call it an asset. Generally, you can call it an asset.
Because
If you heard me well, when I started explaining, I said generally it is an asset. Okay, but accounting is telling us
okay,
something else. Okay.
okay, all right,
Yeah,
all right. Thank you, sir.
you're welcome.
So I want to answer.
Sure, you can.
Yeah, so if that asset is not generating any fund money or something, can that also be termed as a liability?
So a liability. So if it is not generating money for you, yeah, you can call it a liability because it's rather taken from you. Yeah, it's a liability. That is why when I started, I said generally it's the definition will not be what you guys expected. Okay. Generally, you own a car, you own a house for yourself. We call it an asset, yes. But accounting is different. Accounting is telling us something different. In management, I mean, we can say it's an asset. But in accounting, that is not an asset because it is not bringing you money. Okay. It is rather if it is rather taken from you, then it's a liability. Is are we okay? Hello, please, are we okay?
Please, what about if it's not
Yes, sir.
bringing you money and it's also not taking anything from you?
So mention one asset that will not bring money, but will also not take anything from you.
We can take a house, for instance.
Okay. So you mean that you will not renovate the house, or if there's something, you mean that you can be in the house for maybe more than 10 years, or up to, let's say, even 1 year. There's nothing that you do about the house, right?
So I think
Okay, so what,
like he
of
said,
land? Land.
this
Yes, one at a time, please.
Okay, I'm asking what of land?
Land is an asset.
Okay, thank you, sir.
So
You're
please, can
welcome.
your private car be an asset or liability?
Can you what?
Your private car that you used to work.
Does that car generate money for you?
That's what you used to go to work, but that's not the one that gives you money.
Does it generate money for you?
Let me say no, but it does help you to work. Your
Yes,
workplace.
please. And just answer my question first, okay? Does it generate money for you?
No,
Do you use it to make money in any way?
you only used to work, but it doesn't. Isn't that the
So
money?
do you use it to work for the business or use it for personal use?
A personal use.
It's not an answer. Let's assume that
Thank
it
you.
is a business that you have. Okay. Let's assume that it's a school that you have, and the vehicle is used to transport students to the school and bring them back. Don't forget, they'll be paying for what? That transportation, right? So it is an asset. That
Yeah.
in that case, an asset. If it is being used in the business, if it is being used in the business or in the company, then it's an asset because it is indirectly or directly going to bring you money because you are using it for the big, not for your personal use.
Oh, okay. Thank you.
Yeah, you're welcome. So
Hello,
assets,
Sadem,
yes, please.
can you take it this way also? As he said, you are going to work with with a car, and at the end of the month, you are paid your salary. So it is the car that is indirectly giving you money, or
Is the car that is what?
that is indirectly helping you to make the money.
But you can also not buy a car and take public transport to work. You still get the same money.
So when
The car
you
is
take
even
the
rather
public
even
transport,
taking more
you
from
are going
you.
to pay. They are going to pay.
Is that?
So I think it's the same. I'm saying if you take the public transport, you're going to pay. So I think it's the
And with
same.
your own
And at the,
with
and
your
at
own
the,
car
and
to
at
be
the
buy
same
fuel.
time, very good. Mechanic will take from you. Filling stations will take from you, right? So
Yes,
please,
You
sir.
change oil. You change
I'm not.
oil too.
Please, you said
I said
When
the
you
one
change
talking on the
tire,
tax.
you change the car tire.
exactly. You. I mean, it will stress you. Not every car will stress you. The key factor
uh,
here is future economic benefit. If it is not giving you future, that asset is not giving you future economic benefit. It's not an asset. Thank you. Let's move on. So we have two classes. Some people call it types of the assets. We have current assets and we have what? Non-current asset. This one previously it is called fixed asset. Okay. This is previously called fixed asset. Hey, sorry. Sorry. This one I didn't see it well. This one rather, the non-current asset is also called fixed asset. Okay. This one rather is called fixed asset. Then we have current assets and we have what? Non-current assets. Okay. We have current and non-current assets. Now, what then is a current asset? What then is a current asset? Now, I'm going to tell you something. Please use this to distinguish between a current and a non-current asset. Please, because if you understand this very well, doing the financial statements or the balance sheet and all that, it will help you to try to understand very, very well. You know, if you understand it here right now, even next semester, it will help you because some of these things you'll be needing them next semester, especially this aspect. This session we are doing today, you'll be needing them the next semester, and your lecturer or your TAs will not go back because it is assumed that you already know it in first semester. So please try your best to understand. So the key word here is expected. So I'll do that. So please pay attention to this word. The key word here is expected. Now, if the assets, okay, take note of this. if the asset is expected to stay in the business. If it is expected, listen carefully. If you are expecting it, or it is expected to stay more than 1 year, then it is a non-current or a fixed asset. If you are expecting that asset should stay for more than 1 year, then that asset is what? A fixed or a non-current asset. If you're expecting that asset shouldn't stay more than 1 year, meaning that within less than 1 year, that asset should not be there, or it should change value, or maybe it shouldn't be there. Let's say it shouldn't be there. Then that asset is what? It's a current asset. The key word here is expected or expected. If you are expecting that asset should stay in the business for more than 1 year, then it is what? A fixed or a non-current asset. But if you are expecting that it shouldn't, or it should change within 1 year or less than 1 year, it shouldn't be more than 1 year, then it is a current asset. Do we understand? I'll give you guys examples.
Yes, I
But
understand.
whatever I said, do you understand?
Yes, I get it.
All right. So now let's look at examples. Then
Yes.
we will see. So let's look at examples. For example, let's look at the the non-current assets. Okay. So let's look at this. Let's look at stock. Let's look at stock, and let's look at building. Let's look at stock, let's look at building. But before that, let me ask this question. Is laptop a current or a non-current asset? Is laptop or a mobile phone? Is laptop or a mobile phone a current or a non-current asset? Yes. You raise your hand, I'll call you. Kindly raise your hand, I will call you, then you tell us why you think it's current or non-current, please.
Please question.
My question is laptop or a mobile phone a current or a non-current asset?
Yes, I get you. I'm trying to say, with this, won't you? I'm feeling that like you'll be the one to decide if something should be a current or
So are
non-current.
you answering, or you are asking a question?
I'm asking.
You are asking.
I'm asking that wouldn't the person like
So can
maybe
we say
uh, uh
So first of all, answer the
machinery,
question, then you ask the
stock?
question, please.
okay, I'll say the building is a current, but
I
the
didn't I didn't I
stock
didn't
would.
I didn't mention
Okay,
I
okay,
didn't
okay.
mention building.
You didn't mention
Mobile
building.
phone. Mobile
Yeah,
phone is non-current.
it is non-current. Okay.
Yes.
Yes, anybody else?
I cannot raise my hand. It's not current.
Yeah,
It's
okay.
current.
Okay, current. Joseph,
Please, it's current.
it is current. Okay. So now, you see the question I've asked you. If you say it is current, you are correct. You are not wrong. If you say it is non-current, you are also correct. You are not wrong. Okay. The reason is that it is based on why. Okay. So now, if let's say I am the one having the laptop to sell, okay, I am the one having the laptop or the mobile phone to sell, it is what? A current asset, because I don't want it to stay, because I want to sell it before 1 year. So that should tell you that that laptop is what? It's the stock or an inventory. So current asset, I explained that the assets that are not expected to stay with more than 1 year, they're expected to stay less than 1 year. So that laptop or that mobile phone, if I am selling it or you are selling it, it is not a non-current, because you can say that all your goods should stay with you more than 1 year. I'm not sure any business person here or any business-minded person will say that his or her goods should stay with him or her more than 1 year, unless you are a drug dealer, you are a criminal. Even as that, even if you're a criminal, you want to offload the goods quickly, you want to sell them quickly. Unless I don't know what you are. Unless maybe you are joking that you are doing business. So at times the assets, the use, or maybe the use will determine if it is a current or a non-current. Okay, so that laptop or that mobile phone is what is current. So if the asset is supposed to stay more than 1 year, let's take the building for example. Most of the time, building of a business is supposed to stay more than 1 year. I'm not sure you build for your business. I'm not sure you build and you expect that that building should collapse or that building should have a problem within 1 year. Excuse me, then there is something wrong somewhere. You build yourself, then you are thinking or you expect that that building shouldn't be in a good condition in less than 1 year, then there is a problem. So please, this is current, meaning that what? It should stay less than 1 year. If it is staying more than 1 year, then it is what? A fixed or current asset. So stock is a current asset because your inventories or your stock, you will not expect them to stay long in a business. Building is what? Is a non-current asset. Cash in hand, cash at bank, they are current assets. Okay, they are what? Current asset. Prepaid, okay, prepaid is an asset, but it is what? A current asset. Okay, we have plant and equipment, which is PPE. They are what? A non-current asset. Long-term investment, they are non-current asset. Vehicle, they are non-current asset. Okay, so basically, that is it for current and non-current asset. Any question? Yes.
Okay, hello, sir.
So Joseph.
Hello, sir.
Yeah.
You
Please,
said
can you throw more light on the fixtures and the fittings and the goodwill with it?
Is that?
Can you throw more light on fixtures, fittings, and goodwill under the non-current asset?
Yes. When we get where we will throw more light, we will look at it. Okay.
Okay, sure.
Don't worry. We'll look at it. Yeah, is
okay, hello,
anybody
sir.
else? Yeah.
Please, you said stocks are current assets, while cars are non-current assets. What of if you deal in a car, you
He said
have car
no.
garage that you deal with?
I'm coming. Say it again.
You said stocks are
Okay.
current assets,
Okay.
and
I said that.
yeah, and car.
I never said a car. I didn't say car.
Okay.
Even if I said car is a current asset, I'm not wrong, or a fixed asset, I'm not wrong, because I've explained why it should be a current at the same time it can be a fixed or non-current.
Okay.
Please, I hope you get it.
Yes. Okay.
Because if it is something that you are selling,
So,
now, if you are selling the car, it is your stock. So you will not expect that it should stay with you more than 1 year. So to you, the one selling the car, it is a current asset. Okay, but the one coming to buy it from you, that person is not going to sell it to. It's a fixed or non-current asset.
Understood. Thank you.
You're welcome.
Please, can non-current can building be example of non-current assets?
So how do you intend that it should be a non-current asset? But building is a non-current asset. No, building is a non-current asset.
Sure.
Building is a non-current asset. Okay. All right. So that is it for assets. Now we are moving on to liabilities. Yes. When we hear the word liabilities, what do you think liabilities are? Yes. Normally, when we hear liabilities, what do we think liabilities are?
Anything that takes money off from you or you consume your money on, that doesn't
Very
bring
good.
profit back.
Very good. Very good. So normally, I tell people that you should see liability as this always. Okay. You see liability as what? Always. What you owe. I'm not saying that owning, okay? I said always. You should see a liability as always. You should see a liability as always. Okay. So any present obligation, okay, resulting from past events, okay, is a liability. If you are to pay something today because of a transaction in from previously, that is a liability. So a future sacrifices of economic benefits arising from present obligations to transfer assets or provide services to other entities in the future as a result of past transaction or event is a liability. What this whole grammar is saying is that a liability is what? Something that you must pay. Okay, something that you must pay. The key word is you must pay because of what? Past transaction. Okay, because of what? Past transaction. If you are owing, so if you must pay something, it means you are owing. Okay, so basically liabilities are what you owe. Okay, basically liabilities are what you owe, what you are owing, your owings. Your eka. You know, eka did not happen. You are calling it owing because it happened in the past. It didn't happen today. Okay, you call it liability because it happened in the past. Okay, so that is what we're saying, what? A liability. So your owings, okay, these are what we call liabilities. And liabilities too, we have two types or classes. We have the current and what? Non-current. So the same understanding that you have for the assets, that duration is the same thing here. Okay. Now, if what you are owing, okay, if what you are owing, you are expected to settle it or to pay back in 1 year, then it is a current liability. If that liability if what you are owing, you are expected to pay it in 1 year, You're not expected to pay it after 1 year. Maybe it is something you're supposed to pay in short term, less than 1 year. It is a current liability. If that liability you are, let's say, going to pay it after 1 year, or it will take more than 1 year for you to pay, it is what? A non-current liability. Okay, it is a non-current liability. Take note of that. It is a non-current liability. Okay.
So please come again, I beg.
Come again with what, please?
The current liability and the non-current.
If
My network was like
if
I
what you
couldn't
are
hear you
owing,
at all.
if what you are owing, you are expected to pay it before 1 year, it is current liability. If you are expected to pay it after 1 year, or it will take you more than 1 year to pay, it is a non-current liability.
Okay, I get it. It's just the same as the other.
Exactly.
Yeah, okay.
Exactly. Please, any other question?
So, hello.
Yes, boss.
Hello. So if you are owing, let's say, a quick loan, and you say it's a non-current or it's a current liability.
A quick loan you pay in less than 1 year.
Yeah.
How does it work?
Oh,
How
okay.
does it work?
So I think it's like when
Quick
you
loan
take,
is 1 month.
is it you pay within a space of a month? Yeah.
A
A
month.
month.
Within a
A
month,
month.
you have to pay. Yeah.
If it's a month, then it is it is a current liability.
Okay. Thank you.
Welcome.
So
So
if you take loan from bank and they are deducting you maybe 4 years, 5 years.
meaning you are supposed to finish paying after more than 1 year.
After
So it
5
is
years.
after 5, and it is more than 1 year. So it is a non-current liability.
Okay.
So we've looked at two elements financial statement. We've looked at assets, we've looked at liabilities. Okay. Okay. So income. Okay, income. An increase in economic benefits results in increase in equity. So look at this. Even though we'll get there, but let's see. You know, a business, if let's say you are receiving something that is going to increase the businesses, or is going to increase your assets, then that is, or is going to increase the business assets. Let me put it like that. Then that is what is an income. Okay, we have income in so many ways. Like we have so many types of income. Okay, we have so many types of income. Yeah, who can give us some types of income? Yes, who can give us one or two types of income? Anybody?
Please, can revenue be an income?
Yes, revenue is an
Yeah.
income. Revenue is an income. Yes, anybody else?
So is there any difference between revenue and profit?
Yes, there's a difference between revenue and profit. I will explain that to you right now.
Passive income,
Passive income. Very good.
investment income.
Okay, yes, very good. Investment income is the same as the portfolio income, because of the dividend you derive. Okay. So basically, we have so many types of income. Do you know that? Do you know that if you are working for, let's say, someone, then the person is taking care of your health. Let's say the person is taking care of your health, let's say your children's school fees. Do you know that is also an income?
Yes, please.
Very good. That is also what? An income. So we have so many types, or maybe you can say sources of income. I mean, so many types. Okay. We have the fringe benefits and all that. Now, someone asked a question. Is there any difference between revenue and profit? Is that a question, please?
Yes, sir. That's it.
All right. So let's look at this. I'll use a demonstration to tell you. Then yourself you see that whether they are different or the same. Okay. So look at this. So let's say you've let's say you've invested 100 cities in a business. Okay. You've invested 100 cities in a business. Then after everything, or you've invested 100 cities in a business, selling of something. Then after selling everything, you made, let's say, 250 cities. Okay. Now, these 250 cities have two components. Okay. The components are these 100 cities you've invested, which is the cost and the profit. Okay. This 250 comprises of these 100 cities, which is the cost and the profit. So this is what we call the 250 you have here is what we call the revenue. Okay. So revenue comprises of the costs and what? The profits. So if you take out the costs from the revenue, what you have left is what is the profit. So we have revenue should be equal to cost plus what? Profit. Please, is that clear?
Oh, okay.
So to get to your profits, so profit is equal to your revenue minus your cost.
Okay. So sometimes when they are give budget and other things, you say they say this company has made a revenue of this also amount. So it means all the costs are also
Yes,
part of it.
the
Not that.
cost involved in doing that is part, and the other one is also on it. So assuming that the business use, let's say, 1 million Ghana cedis, okay.
Yes, sir.
So let's say this is what the business invested. Fish. So let's say the business invested this amount, okay. Then after everything, they made 550,000 Ghana cedis. What can you say? What can you
They
say
made
about
profits.
this? Hey, really? You've
Say
invested,
1,450,000, and you say profit.
Bossy,
I didn't see. I didn't
It's a
see.
loss.
Bossy, you've invested 1 million Ghana cedis, and after everything, you receive 550,000 cedis. Then you're telling me you
Oh
made
no
a
no no
profit.
no.
Uh-huh. So can we classify that one as a revenue?
Yeah, this is a revenue. So in
Either loss
this,
or profit.
exactly. So there's profit, there is loss here, there is cost here. So it will be in negative.
Oh.
Please, you understand.
Well understood. All along, I've been thinking when they say revenue, the company has made this revenue. It can even happen that they've made loss, but we
Oh
thought
yes. Yeah. You can even make a
that's
loss. Yes,
okay.
you can even make a loss. Okay. So don't let big grammar confuse you.
Oh,
Don't let big
okay.
grammar confuse you. All right. That is it for income.
So, sir,
Yes, madam.
Sir, please, can you say the equation that you gave it out? Can you say profits equals cost minus revenue?
So you said profits is equal to cost minus revenue.
Is it
No,
possible that equation?
no, no. Profits is
Oh,
equal to revenue minus cost.
okay.
Yeah.
Thank you, sir.
Welcome. All right. So the classes of income, we have revenue. So revenue is something that we get from delivering or producing goods, rendering services, or other activities. So let's look at this. So assuming that you want to go into watch business, okay? Let's say you want to start selling watch, then the money or all the cost you've incurred, okay? The cost you incurred, that is your cost of production is, let's say, 1,200. Okay. So you spend 1,200 to prepare wachi to sell. And after selling everything, the shito, the gari, the spaghetti, the water itself, the fish, the meat, the eggs, the sausage, the cocoa, the salad. After selling everything, you've made, let's say, 500 is too small, even though it is feasible, but people will shout. I mean, some people here are thinking of going to watch a business. They might get discouraged. So let's say after selling everything, you made, let's say, 1,000. Okay. Now, you making these 1,000 cities, yeah? This is your revenue. Okay. This is your revenue. Okay. If you look at your revenue and how much you've invested, you realize that they are not the same. This is lesser than what you are making. So genuinely, we say we made what? A loss. Okay. But look at something. If this is your first time of doing this, making 1,000 CDs is actually, if this is your first time doing I mean, you just started today, or you are now getting customers, and you made 1,000 CDs, sir. I mean, even though you made loss, sir, one way or the other, it is actually okay, okay, because it's the first time. There are some extra jara. Hey, first of all, the Muslim people, where is our meat? So the whole of today, the Muslim among us, none of us call anybody say, "Oh, come for your meat." Don't worry, Christmas is coming. Sorry, Easter is coming. Don't worry. So,
Sir, this not this one is the it I had it this in the one that we share meat.
that one there is now you sabi. Salah is
So
Salah, whether
let's
it
say
is small or big, it is Salah. Let's
So he go
continue.
explain tire.
I will
don't
explain
worry.
Taya. Oh, let's continue. So, if let's say you are starting this business, then it means that, I mean, getting 1,000, I mean, it is okay because you want customers. So some of the things you just give it for people to come back and all that. Okay. So please, there are a lot of things I think if those of you want to do accounting or major in accounting now, you learn financial management and not, I mean, you learn some courses. Okay, so you understand some of these reasons why these things happen. Okay. So classification of income, we have revenue and we have what? Gains. Okay. Gain is also part. Now, expenses. Expenses. Some people call it expenditure. Some people call it expenditure. Okay. So expenses are the outflow of what of assets. Okay, when there is a liability, or yes, when there is when there is something you need to pay. Okay, that is an expense. Okay, so expenses are decrease. They rather decrease. So take note that expenses what they decrease your assets, but income increases your assets. Okay, expenditure decreases your assets, income increase your assets. Okay, all right. So look at these things very carefully. Expenses are decrease in economic benefits that result in decrease in equity. So in the eye, you can see a question like, so are expenses, or sorry, are decreases in economic benefits that result in decrease in equity. A, so and so, B, so and so, C, expenses. So please try to know what you are doing by understanding. Okay. So expenses and losses, also here. So basically, that is that for the element of the financial statement. That is assets, liabilities, and all that. Okay. Any question, please? Any question? Oh, God. Sure. All right. So recognition. Some of you get question here too. Okay, so you need, if you understand what recognition is, you'll be fine. Now, the process of including financial statements, an item that meet the definition of financial statements and a fundamental criteria. So let's say if you are able to see that this item should go to the financial statement, then that is what we term what? Recognition. Okay, so you see something when you are preparing the income statement, you see something like salaries, then you see wages and salaries. You will see salaries, you will see wages and salaries. You know, the way we treat them, in a way, they are not the same. Okay, in a way, they are not the same. So if you're able to identify that salary should go to the income statement, this item should go to the income statement. Let's say you're able to identify that drawings should go to the income statement, then that is what we call what? Recognition. Okay. So the process of including in the financial statement an item that meets what? The definition. So if an item meets the criteria of the elements of a financial statement, and you're able to identify and put them in the financial statement, that is what we term what? Recognition. Please, do you understand? Please, do you understand?
Sir, please go
So,
over once more.
go over. Go over.
So let's say Madam Vida, you see Madam Vida tomorrow on campus, then you are able to identify that Madam Vida is a man. Let's say tomorrow you see that, okay, you see Madam Vida on campus, then you say, okay, Madam Vida, based on some things from Madam Vida, you said that Madam Vida is a man. So you write her name under the men that were on campus yesterday. That is what we term recognition. Which is that clear?
Yes, sir.
Madam Vida, don't be angry, okay?
Not at all.
Thank you. Please, do we understand?
Yes.
Yes,
All
sir.
right. So, Madam Emmanuel, so if we're able to see you tomorrow, then we realize that yes, you have breast, you have buttocks and all that. Then I write your name under the ladies that were on campus yesterday. That is recognition. All right. Now, the fundamental recognition criteria. So before, I mean, when we say recognition, you understand recognition. So what are some of the things that you see to know that, okay, this meets to go to the, this item meets that criteria to be recorded in the financial statement. These are them. So for an element to be recognized in the financial statement, it must meet all these what criteria. Okay. So it must be defined. So if you see, let's say you saw that, you saw a transaction, then define a transaction to see if that transaction meets any of the elements of the financial statement. Now, that transaction or that element, can it be quantified monetary? That is a measurement, okay? That does it have monetary value on it? Is it relevant and is it reliable? Then if you do that, then it means that what? You've recognized that item. So under the definition, it must meet the definition of elements of financial statement. So for the measurability, it has what? The attribute of to be measurable. Okay, that is if you can put monetary value on it. Relevance, reliable. So for the sake of your IA, okay, for the sake of your IA, kindly pay attention to these 5 things. Okay. The criteria for recognition, they are 5. So sorry. Yeah, sorry, they are 4. Yeah, they are 4. The criteria for recognition, definition, measurability, relevance, and reliability. Kindly pay attention to that. Okay. Really, really pay attention. Okay. So we've already looked at assets, we look at liability, we look at income, expenses, and all that. So I've explained measurability, measurement before already. I think we even look at it under some of the concept that we looked at 2 days ago. That is a money measurement. So putting monetary amount on an element, that is what we mean by measurement. Okay. So when you put a monetary value on something, that is money, that is what measurement. Okay. If you can put monetary value on it, then you cannot measure it. Okay. For example, loyalty, loyalty, loyalty. You cannot put monetary value on loyalty. So we can't, quantify it or maybe put it there. Okay. All right. So we look at historical, okay. So for the sake of you know what historical cost is already. I've explained that. Okay. I've explained historical cost, that's how much you bought an item. That is a historical cost. So if they are selling an item for 10 cedis, okay, then you bought it for 8 cedis. The 8 cedis is the historical cost. How much you purchased the item. This is the market price. This is the historical cost. Okay. Then current value, based on the cost that will be incurred in acquiring a similar item on the market in its current state. So let's say you bought a car for 400,000 cedis. Okay. Let's say previously, you bought a car for 400,000 cedis previously. Then let's say in 2020. Now, 2026, that car, if that car, that the amount you can buy that car, exact car in 2026 is what we call the current value. Please, you understand? Please, you
Yes,
see them in
please.
your eye. That is what we term the current value. Then we have net realizable value or the settlement based on the amount that will be realized if the event of disposing it. So that is what we call, some people can call it scrap value. Okay. Some people can call it scrap value. So let's say you bought a mobile phone for, 6K, 6,000 cedis. Then you dispose it off, maybe you resell it. Then this is the amount you've realized. Let's say we receive 5K. This is what we call the scrap value, or maybe how much you've realized. Okay, this is what we are saying about the settlement value or the net realizable value. So those of you that will buy, let's say a cooking pot and all that, you buy the set, then this scrap metal people will be passing, then you give it to them and take 5 cedis, 10 cedis. That 5 cedi, 10 cedis is the settlement value we are talking about. That is a net realizable value. Please, you understand?
Yes, please.
No. Yeah. Then we have present or discounted value. So based on the discounted
Hello.
future cash flow, yes. Someone said
Sorry,
hello.
it's the network.
Casual people. All right. So present value or the discounted value based on the discounted future cash flow associated with the usage of the item. So I think the BSc students among us, you'll be doing this present value of something so and so next semester. Even when you get to those of you who want to major in accounting too, you'll be learning something about present value, annuities, and all that. Okay. So present value. Let's say you have 10 CDs today. Okay. 10 CDs today. Now 10 CDs today, what 10 CDs today will get you? Can it give you that same thing in the next 10 years? Or in the next, even next year? Hello. What 10 city will get you today?
No.
Can it get you the same thing next year?
No.
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 Exactly.
The
That
value
is
will
why.
depreciate.
Okay, very good.
The value will
So,
depreciate.
very good. So let's say 5 years ago or 10 years ago, 10 cities can get you a lot of things. But now, 10 cities cannot give you what that you can even be satisfied or you'll be full. Unless you are in Castle, then that one you can get watch it for 5
Even
cities.
20 cities kura. I'm learning besides I don't what they call power numa and I was like I said
Oh yeah.
1 minute I'll be our person or them for 20 cities watching 20 cities keke no. I say I don't dey for
But
keke na.
previously that 20 cities can get you a lot. Currently they are selling cocoa for 7 cities. Yeah, they're selling cocoa for 7 cities. These 7 cities can get you cocoa like 3 times previously. Previously, those times that you only wear box and be roaming around. 7 cities can get you cocoa plenty, or they'll give you 5 children 10 cities to go and buy cocoa. 5 children, 5 children to go and buy cocoa. But now, even previously, see 10 pesos previously will get you a sachet of water, but now you have to get 5 of these to get 1 sachet of pure water, or 1 sachet of water. Okay, so basically that is what we call the present value of something. Okay, all right. Any question, please? Please, I hope we are all on the same level. Are we following?
Yes, sir.
Yeah. Before I forget, so tomorrow is Saturday. I think we've dropped some IA questions. What we are going to do is that I'll get the answers and share. Okay, I'll solve it, share the answers with you, because it is really not possible for us to meet to solve them. So I'll share the answers with you. You learn them. When they drop in the exams, you are safe. When you drop in the IA, you are safe. And also the quiz that you wrote yesterday, I got some of the questions. I'll solve the questions also. If likely you meet them in your IA, I'll get the answers and share with you as well. If you see them in your IA too, you're on the safe side. So probably by the close of tomorrow, you get the answers for the past IA questions that I've shared, and um what else? And the quiz that you wrote yesterday. I'll share the answers with you. Yes, also for Joseph.
Ask a question. Will the quiz be graded?
Please, I don't
I
know.
don't know. Yeah, I don't know
I want
whether
to
you
know
saw
whether the
the
quiz will be graded.
Please, I don't
yes,
know
I
whether
don't
the
know.
quiz will be graded.
It's a night of
Yes, you can talk.
yeah. So yesterday, just a quick one. Yesterday, there was a place where they call the one of the questions. I don't know whether they I don't know why they gave me one, but I just want to ask you if you have a fair idea where they asked that which of these is not a business entity. Now I choose religious associations. I wanted to ask you, is a religious association a business organization?
How do you know that the answer you chose is wrong?
I forgot the other two, but the
But was
question.
there a feedback? Was there a feedback after answering the question? Then you realize how did you know that the answer was wrong?
No, because I know that religious association is not a business organization.
Yeah, honorable.
Yes, please, I'm coming. Let me
Yes,
answer
so
you, okay? Hold on, let me
yeah,
answer
so
you.
like, a quick one, please. So after answering the questions, we were given you'll be able to view your results. So when you go through the ones that you got correct, so it will be 1/1, and the
Oh,
ones you got
okay.
wrong, it will be 0/1.
Okay.
Yeah.
So you
So I
chose
think
business organization.
majority of us chose the religious organizations, and we ended up having it wrong. So we were a bit confused.
Okay, majority of you chose business organization and sorry, religious organization,
Religious organization.
and it is wrong.
Yeah.
I don't know how the question is, but if it is
Yeah. So
that,
I'm
if
checking
it is
through.
a
Let me see if I'll get it. Then I'll read it for you too.
okay, but take
Also,
note of
they
this.
were like,
If a business, take note of this. If it's about making profit, it's a business. Okay, so read the
so
question. Let me
the
hear, please.
question was, hello, hello, no.
Yes, please. You can read the question.
Yeah. So which of the following is not an example of a business entity? And number one was sole trader. Two, partnership. Three, company, club, or association. And then four, religious association.
I don't know. I can't really hear you clearly. Please, can you read the
So,
question again?
yeah. So,
I think it's
Okay.
partnership.
which of the following? Can you hear me?
Yeah.
Yeah. So the question is, which of the following is not an example of a business entity?
Okay.
Um. uh, yeah. So A was sole trader, a sole trader.
A
B,
sole. Okay. The
partnership.
possible answers are sole trader. Uh-huh.
Yeah. B, partnership.
B,
C,
partnership.
company, club. Yeah. C,
Okay.
company, club, or association. And D, religious association.
A, religion partnership.
No, A is sole trader. Sole trader.
Sole trader. Okay.
Yeah.
Okay. So the answer is religious association.
Yeah, but we chose that one, and we all, I think all those that chose it got it wrong.
Yeah. So this is how the thing is. Religious association. If I heard you right, you said sole trader, partnership, club, or association.
Yeah,
Then
partner,
religious.
company, club, or association.
Then religious association. Right now, religious
Yes.
association based on the accounting standards. Yeah, religious association is not a business.
Okay.
Okay, religious association is typically considered a non-profit or charitable.
Okay.
Yes,
Okay.
so yeah, that is it. Unless that is it. Okay.
So we are confused as to why we
Ah,
got it wrong.
okay.
Yeah.
That's question the lecturer or the person who said the question can answer that question.
Hello, sir.
Yes, please.
Good evening, sir.
Good
Sir.
evening.
So there was a similar question to that same question, and let me read this, sir. So here it says that one of the following is not a form of a business entity. Siblings, can you hear me?
Yeah.
So this one it says that one of the following is not a form of business entity. A, sole proprietorship. B, quasi companies. C, partnership. And then the D is limited liability company.
Okay. And so what's your question?
So, I mean, here, so the possible answers given, we have sole proprietorship, which I know is a form of business entity. Then the quasi companies. Then the C was partnership.
No, wait.
So
You said, are you saying quasi company is a form of business entity?
no, it's a company or because I'm saying partnership, then limited liability company. I say, and the question is which of the following is
if
not
I've heard you right, you said one of the following is not a form of business entity, right?
it's entity, yes. And I'm
It's
mentioning the
not. Are you
possible
saying
answers
it's
to you,
not?
sir. It's not, yes, sir, yes, sir.
Okay, possible answers.
And the A is sole proprietorship.
Sole proprietor is a form of a business entity.
It's a business entity, yes. And the second one
Yes.
is B is quasi companies.
Yeah, quasi is not.
And then the C is partnership.
Partnership is.
And then the D is limited liability companies.
Limited liability is. So the only odd one there is a quasi.
There's the quasi companies.
You say quasi companies.
Quasi. The answer is
that's
quasi
what
company. It's quasi, commercial law, quasi.
Quasi, Ben.
Yo.
Hello, sir.
I didn't hear a question.
Yes.
Maybe.
Hello, sir.
Yes, I can hear you.
Yeah. So with the first question that my colleague read, I think the answer is company club association, because the company club association is not a standard form of business entity.
Yes.
So,
Even though it is not, there are some clubs that operate as a business entity.
okay.
You get it? Even though it is not, there are some clubs or associations that operate as a business entity.
So in this case, do you think the religious association is recognized as a business entity over the company club association?
That is why I said, based on the accounting standard or principle, the religious associations are not a business.
Okay.
All right. And also, please, we couldn't do the face-to-face today because we are celebrating Salah. So Monday, we are meeting, okay? Don't forget, Monday, we are meeting on main campus for the face-to-face. All right. Let's move on. So we are looking at the double, please mute your mic. We are looking at a double entry in the accounting equation. Okay. So accounting equation is when you have assets, so asset is equal to equity plus what? Liability. Okay. So the business's assets, let me clean this and rewrite it. So the accounting equation, you can write it three ways. You can write it like assets is equal to asset is equal to equity plus liability. We can also write it as asset is equal to equity. Okay. We can also write it as asset is equal to liability. So the first one, asset is equal to equity plus liability. It means that the business's assets can either come from the combination of whatever you yourself you are bringing plus whatever you are bringing from elsewhere. So this means that let's say you own a business, yeah. Now the business itself is like everything. The business is what we call the asset. Okay, the worth of the business is the asset. Okay, so now look at something. This business here, this asset of the business is either coming from your own contribution, your own money, what you bring from you yourself, that is the equity. Okay, so if you did not borrow anything or you not take anything on credit, everything is coming from you, you are not owing, then it means that the asset of the business is equal to your equity. So the asset of the business is equal to how much you yourself you brought in. There are some businesses that the people, everything is on what? On loan. Okay. Let's say it's on loan or maybe they borrow. There is nothing coming from them personally that is in the business. That way we can say that what? The assets of the business is equal to it's equal to the liabilities. Some businesses also is the combination. Okay. Some people will bring some, then they will go and get parts and come and put inside. So when asset is equal to equity plus liability, we have it, then asset can also be equal to equity, meaning you've contributed everything yourself. Okay. Then asset can also be equal to liability, meaning that what? You did not contribute anything, you borrow everything, then everything is on always. Okay. So that is the understanding of what the accounting equation. So the resource of the business, which is the assets, is equal to what? The claims over the resources, which is what? The equity. Okay, which is what? The equity. Okay, then we have the asset is equal to liability, which is the other one that we spoke about. Asset is equal to the equity. Okay, then we can also say that we can combine the two to make it what? Asset is equal to what? Equity plus what? Liability. You know, some businesses, or maybe some of you have a business. This is the business. In the business, you have your own resources inside, and some of the resources in the business are not from you. There's things that you brought in on loan. Let's say like a loan or credit and all that. So combining what you have yourself and the loan or everything you are owing will give you what? The asset of the business. That is what we are talking about. Okay. So basically that is that. That is the for tonight. Any question or anything that we've done so far? Any question, please?
Sir,
Yes, I can hear you.
In talking of the liability, can it be that a company went in for a loan to purchase a car, and then in that sense, the car can be the liability, and it becomes as liability the
Please,
company.
I don't know. Kindly come in again, right?
I said, like, let's say a company is short of logistics, like they need a car, and then they went in for a loan to purchase the car.
Okay.
In terms of liability, can the car be termed as a liability to the company
What are they going to use the car for?
for company operations?
It's an asset.
It's an asset, okay,
Yeah.
for myself.
Yes, Madam Millicent.
Yes, sir. Please, for the element of financial statement, you mentioned we have income and then statements of financial position.
No, I
Then
never said
again, we
that.
have,
And I never said that.
okay, can you please correct me on that?
So the elements of the financial statement, we have assets, liabilities, equity, income, and expenses.
So those are the elements,
Element, yes, please.
right? But then you made a branch naming income, that is, we have profit and loss or something, and then another branch we have, that is where we have the assets, the liability, and then the equity. How do you term all those things you mentioned?
Well, you can say that let's say income and expenses are the components of income statement. Then we can say assets, liability, equity are the components of the SOFP.
Oh, are the components of the
Yes,
SOF?
please.
Okay, okay. Quick one. I would want us to go back to the books we studied earlier on. You said
Which
we have the journals, and then from the journals we move to ledgers, and then we have trial balance or something.
that is the
And
accounting
then
process.
lastly, yes, please. And then from the trial balance we move to the financial, is it financial statement or
Yes,
something?
please.
Yes. So at that side, that was where you met, I don't know, that was where I heard we have income under that side, which is the profits or loss. And then the last book was, can you help me with that?
So are you talking about financial statement?
Yes, the books under the financial statement.
Okay.
I had
So
income and
let me
then
say the books. Okay. The books are the income statement and the balance sheet.
right, okay, okay. All right, thank you.
You're welcome.
Okay, Honorable.
Yes, Osofo Kofi.
Please, can we say a car, a company car, can we classify company car as liability when the company continues making a loss?
Is it intended to make money?
Yes, he intended to make money, but maybe at
with
the end
with
of
the car? It's
annual.
intended to make money with the car, right?
Yes.
It's an asset.
Okay.
Yes, sir.
Yes.
Yes, sir.
At what point?
Yes, please, kindly raise your hand. I'll call you, okay? Emmanuel.
I've raised my hand though, and they are passing over me.
Yeah, yeah. No, I think Kofi raised the hand. That's why I called you. So, Emmanuel, you can talk.
Yeah, I've raised.
I haven't spoken yet. I
Okay.
haven't spoken yet. He hasn't spoken yet.
Oh, Kofi, I called you.
Yes, but someone else overtook me.
Oh, okay. Don't worry. Let
So I said,
Emmanuel talk. Then you come in.
oh, okay, that's fine.
So say, asset is equal to equity plus liability, right?
Yes, please.
And the equity, you said that the equity is what? Let's say if I'm the one trying to like start a business. The equity is what I have on my own to start, and the liabilities is
Yes,
what
please.
maybe I'll go and bring from outside. And my guy was asking that if let's say when I started, I needed a car. I needed a car so bad because it will help a lot. With if I don't get the car, it won't make things go. So I'll go and take loan and um go and buy the car. But meaning I'll be paying for it. I'll be paying gradually when I'm making profit to so that I will settle that cost. And will I still call that car the liability or it's still the asset?
So taking a loan to buy a car is two things. The loan is different from the car. The loan is a
Okay.
liability. Now the car, if the car is intended to make money, it's an asset. If it's not intended to make money, that is it's also a liability because you have to. So look at something. You took loan. So let's look at it this way. You take a loan to buy a car. So already you are owing. You are in negative. Then let's
Yes.
say that car, you're expected to use that car to make money. Meaning that, well, I mean, that is an if the car is expected to make, it's an asset. Okay, so that is a
Okay.
plus.
Okay.
But you took loan to buy a car for personal use. You are in negative, which is a liability. At the same time, since that car you are going to be spending money on it, it's going to generate any money for you. It's another liability. Is that clear?
So I'm not. Okay, so is it that the loan that will be the liability, or
Is it that what?
the car is an asset, but the loan that I've taken is the liability, what
No,
I'm
the
owing.
intention of the car will determine whether it is an asset or a liability. What is it intended for?
Okay.
Okay, is it intended to
So,
generate
and I'm saying
money?
that okay, see, okay, so like the school bus like this, the school bus will have it's a school, and the school bus will take will go for the children, send them here, and then like they pay for it and stuff. So it is generating money for me. But let's say
So it's an
I
asset.
have established the school, and then I need the bus too, but I don't have it now. I need to get it, so I then go take the loan, then it will be working. Eh, I don't know if which one should I call the liability, or
The
which one
loan
will be
is
the
different.
liability
The,
now.
the loan is a liability. The car is an asset.
Okay, okay. So the loan would rather be the liability, what
The
I'm
car is an
owing,
asset.
what the
Yeah,
business is owing. Okay,
yeah.
thank you.
You're welcome. Yes, Bro Kofi.
Yes, sir. Please, I want you to explain the difference between equity and
Please,
capital.
I can't hear you.
What's the difference between equity and capital?
What's the difference between equity and capital?
Yes, sir.
Difference between equity and capital.
Yes, sir. Yes, sir.
Okay, so they are not, let's say, entirely the same, but they both serve the same purpose. Okay, so the capital is the amount contributed or something you use to start the business. Okay, equity is also the same thing. Okay, but equity includes your capital plus other things that you have in the business. So it can include your capital. So equity is the same as your capital plus maybe your drawings, your profit, and all that. Okay, so capital is there. Capital is part of equity. Okay.
All right, sir. Thank you.
All right. So capital is part of equity. Okay. Then equity itself is capital plus other stuff. Please, you get it.
Yes, please, I do. I do. Thank you.
All right. So you're welcome. Yes. Done. Yes. It's off with John. All
Sir,
right.
please,
Yeah.
my question is
assuming a company like in the same car business, the company went in for a loan to purchase a car. After purchasing the car, the intent was to generate money out of it or to use it for profit. And then after going out for the loan, the car gets an accident. In this instance, does the car become a liability or it becomes an asset?
Please come in again. Come in again.
I said in the company,
Okay.
the company went in for a loan. The company went in for a loan to purchase a car. It can intend to use it for business to generate money.
Okay.
And then after going in for the loan to purchase the car gets an accident. In this instance, does the car become liability or asset of the company?
The car gets an accident.
Yes.
So
Beyond
you people, you are using scenarios to determine whether it should be an asset or a liability.
A liability.
Okay. Yes, you are using scenarios. Right now.
So sometimes we take the questions. That's why we are also asking these questions. But sometimes the question comes to
no, I don't know how to put this, but if in that case, it is a liability to you because you have to pay for it, But I don't know if you guys are running away from the real thing. The car you purchase, what is the intention of purchasing the car?
To bring money. Generate money.
It's an asset. Whether the car fall into water, it had an accident or not, the intention determines what the car is for, what the car is.
Okay, so it's about the intention of the car.
Exactly.
Okay. So now I get it now.
Yeah.
So the loan is the liability, but the car becomes the asset of the company.
Exactly.
No matter what the condition is, the car becomes an asset to the company. While the loan becomes the liability.
Simple.
Thank you so much for the clarification, sir. Now I understood, sir. Thank you so much. Now I can look over my hand.
All right. Yes, Emmanuel, I think I've called you already, so that is all. So please, thank you for joining. Yes, Joshua.
Sir, I want a light difference to be thrown on the equity and the assets.
Okay, what do you want to understand?
Sometimes it gets me confused, classifying some items as equity and assets. I don't know if they all have the same qualities sometimes, or it's always different.
Okay, so let's look at it this way. So this is your business, okay? Your assets, we say asset is equal to equity plus liability, okay? Now, the business's asset, okay? You can say that the equity is the same as when you take out all the business owings, all the liabilities of the business, what is left is what we call the equity. Did you get it now?
Yes, sir.
So the asset, you can look at the asset as, let's say, as how I use the revenue to explain something right now. So you can say the asset is like the revenue. So when you take out the liabilities of the business, okay, after deducting all the liabilities, what is left is the equity.
Thank you so much.
You're welcome, boss. As Isa.
Good evening, sir. Please,
Good evening.
mine is about exam questions. as is a random questions, sometimes you may meet a particular question multiple times. I don't know whether we normally don't get it correct or I normally don't get it correct. That's why they repeated it or
No, it's the
that's
system. Is the system. If you get a same question 5 times, just pick the right answer 5 times. It's your bonus. So it's your that is your advantage. Why?
okay, thank
You're welcome. All right. Thank you for joining tonight's section. Wish you all good luck in your IE. I will solve the past IE questions and your quiz and share the answers with you. Wish you good luck. Have a good night. Bye bye.
Thank you so much, sir. We really appreciate your time and your effort. Thank you so much. God bless you too.
Please, let's remember that Monday we'll be having a face-to-face on main campus. So let's do well and then be present. Thank you.
It's hot time, hot time.
Yeah, so it will start around 10 a.m.
Okay.
Yeah.
Thank you.
You're welcome, boss.